What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a bounce across the indices, but we did not break through any critical resistance, so the market still remains vulnerable to more downside. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.98% and SPY is still not closing above that critical resistance zone at 380, so you still need to be very cautious at these levels. So just a quick reminder, above 380 we could go fill the gaps above, which means SPY could start running up towards 401. But while we are below 380, we still remain at risk of seeing that price target down here at 350, with the price action trigger being the breakdown below support at 370. So it's a very simple market right now. Below 370 we are likely going to 350, and above 380 we are likely going up to close the gap at 401, and there will be a lot of bears waiting at that resistance. So it will not be an easy route for the bulls to break through all of this resistance above. Now on the way to fill the gap at 401, we do have other resistance levels, with the first of course being 380, and then the gap fill right around 389 and our 20 simple moving average at 394. So we will need to break through all of that resistance, and there could be bears waiting at all of these levels because we are in a bear market and we are still in a downtrend. So remember, the bulls are going against all odds by trying to go against the trend and break through resistance, so you still need to give all the benefit of the doubt to the bears until the bulls can prove it by forming higher highs and higher lows on the daily chart. This is clearly a lower high and a lower low, and we are getting the bounce off of the low, but there is no guarantee this is not just a lower high before the next lower low with that price target at 350. Keep in mind too, the Bollinger Bands are expanding, so that next move lower could happen very quickly, because remember, the bears do take the elevator down. So just be very risk off below 380 and definitely risk off below 370 with that valid price target at 350 as long as we have the bear trend, which we obviously do still have a very strong bear trend. A lot of this bounce in the short term is just correcting oversold conditions because we were getting way too extended to the downside with that vertical move down. So don't get bullish just because we're getting a weak bounce. You need to see price action proving it, and that will be the break above 380. On the NASDAQ 100 triple Qs, we were up about 1.5% today, and the same exact story as SPY, as we had no critical price action breakthroughs of resistance. The critical breakthrough of resistance on the triple Qs will be the break above 287, and then above 287 we could go fill the gap right around 299 and test that critical resistance trend line. If we get that breakout above 287, look for resistance right around 289 for the gap fill, and that 20 simple moving average right around 294. And if we can break through all of that resistance, we will likely fill the gap at 299. However, while we are below 287, this could just be a bounce before we make that next leg lower, with that next leg lower price target being all the way down there at 258. On the downside, we will have support at the gap fill right around 277 and the previous low at 269. So there will be support on the way lower, but it will likely be a very quick trip to the next price target if we are indeed going down to 258. So do be risk off if we start breaking down below about 275. This is very clearly a downtrend, and this is very clearly a strong bear market that has no reason to go higher. So if you're waiting to get bullish, let the price action prove it. You do not want to try to call a bottom in a bear market because we could still be going much lower. If you've never been in a bear market, it is something you do not want to try to call a bottom in, because these bear markets can be very long. And if you want to see what a prolonged bear market is, you need only go look at the ETF Arkk and see how long that thing has been declining. If you don't think it's possible, it absolutely is. So be very risk off while we are trading below these critical resistance zones. In the Dow Jones, we were up 0.7%, and while we did close over the 5 EMA, you can see the price action did nothing to break through any critical resistance, with that critical resistance level in the Dow Jones being the break above 311. If we get that breakout above 311, that will be bullish and will likely close the gap at 314, with strong resistance at our 20 simple moving average at 318, and above that will likely fill the gap at 323. As you can tell, this is still a very strong bear trend, so do not get bullish until we can at least get above 311, and more than likely we are going to break down to new lows. Below 297 we could head all the way down to 276. Keep in mind the Dow Jones hasn't been hit as hard as the S&P 500 and the NASDAQ 100, but that doesn't rule it out as a possibility, so don't completely rule it out that we could be heading much lower on a break below 297 unless we can get rid of this bear trend and see some bullish price action. In the Russell 2000 IWM ETF, we were up 1.2%, and the Russell 2000 did slam into that resistance at 170 but failed to close above it. Just like the rest of the indices, we need to see price action breaking above these resistance zones to get more bullish for the gap fills above. If IWM can close above 175, you have strong resistance at 175, and then the gap close right around 178, and that will be very strong resistance because our 20 simple moving average is there as well. If we break above 178, look for the next gap close just above 183, and we will have the 50 EMA of resistance there as well. So as you can tell, all of the indices are still in bear trends and still failing to close above resistance, so you still need to be very cautious of more downside, because if bears are going to show up, they are going to show up at resistance, and you can clearly see this is a great risk reward setup for a short trader in IWM. The next bearish breakdown will be the close below 164, with the next valid price target to the downside at 156 as long as we have the bear trend. On the ARKK ETF, we were up 7.1%, and ARKK did get what looks like a bullish breakout above the resistance trendline and the 20 simple moving average with that close above 42. Normally, when you get a bullish breakout like this, you want to see follow through, so we will want to see this ETF closing above 42 tomorrow yet again. Otherwise, this was just a false breakout short squeeze before the next leg lower. The next strong resistance, if we close back over 42, will be resistance at 47, and then we have that ultimate resistance test up there at 52. And if we start closing above the 50s for consecutive days, then we can start getting more bullish. If we break down through support at 42, look for the retest of the gap close right around 39 and the retest of the low at the support level at 36, with the next valid price target as a brand new 52-week low at 33.7. On the VIX, we were up 0.35%, and the VIX is still in the bull trend and still trading just below 30, so at any point the VIX can spike back up above 30 for that next volatile sell-off. It's not until the VIX starts closing below 24 that I would start to get more bullish, so be very cautious of the VIX bouncing off of this support zone right around 28, and the next valid price target for the next leg lower in the VIX would likely take the VIX up to 38, and then we could possibly say we reach capitulation and hit a tradable bottom in this bear market. On Bitcoin, we're currently up just over 4%, and it does look like that Bitcoin support level at 20,000 is still holding up, as there are buyers accumulating at this level, but we've still seen no bullish price action off this support to imply that we're going to bounce from here. So still remain cautious, because if we break down below about 19,000, we could still capitulate to that next price target lower right around 12,000. If we bounce off this support, it's still possible we bounce all the way back up to 28,000, but wait for confirmation of the breakout back above about 23,000 before you assume we're getting that bullish price action. On NVDA, we were down 0.83%, and NVIDIA did close back over 161 yet again, so far that support level is holding up, but we don't have confirmation of the double bottom until we close back over 166. Above 166 will very likely close the gap right around 181, but we will have resistance right around 175 and 179. On a break below 161, look for a retest of the lows at 156, and that downside price target is still valid as long as we have the bear trend down there at 150. And if we break below 150, we'll likely reach full-blown capitulation back down to support at 125. As you can tell, this stock is still in a bear market and still in a bear trend, so don't get bullish until we can get all the way back above about 196. Even though you can trade off of any of these support levels, just know you need to set your risk accordingly and manage your risk if we break below that level. On Tesla stock, we were down 0.43%, and Tesla did close back over $700 for 3 days in a row, and we are still trading right around that 20 simple moving average, so the bulls are holding price above this level. However, we're not getting bullish until we get the close over 775, which is back over the 50 EMA, and then we should start to develop a bull trend. If at any point we break down below 700, you still have support right around 684. But below that, look for the gap fill at 652, and the strong support below that would be down here right around 620. And if we break below 620, the next leg lower would likely take us to 571. So you can use 700 as a risk level as a bull to take long trades, but if we break below 700, you need to be getting more risk off for a retest of 620. On Apple stock, we were up 2.16% today, and Apple is one of the only stocks other than Tesla that is starting to break through some resistance, but it's only one day, so we would like to see some follow through with tomorrow's price action. Of course, the resistance level I'm talking about on Apple is the close over 137. So above 137, we could come up to the next resistance zone right around 141, or fully close the gap at 142.5, with the bullish breakout being the close above about 147. Above 147, we still have resistance at 150, but above these levels, we will be looking more bullish, but we need to see price action closing above those levels for at least 2 days in a row. So one day above 137 is definitely looking more bullish, but we still can't rule out the possibility that this is a false breakout before we come back down to close the gap at 131.5 or retest support at 130. If we lose support at 130, the next leg lower would likely take us down to 120 in a hurry. On the financial sector, we were down 0.38%, and the financial sector is still looking incredibly bearish and very weak, with the price action closing below all the moving averages, even though we did hold up at that support zone. If we break that support zone, look for full-blown capitulation in the financial sector. In the industrial sector, we were down 0.51%, and just like the financials, we're still seeing very bearish price action below all the moving averages and an incredibly strong bear trend. The healthcare sector was up 2.24%, so by far the healthcare sector is looking the strongest, and it's very close to closing that gap right around 127.6, but as you can tell, there is going to be resistance at the 20 simple moving average at 127. A rejection from the 20 simple moving average would be very bearish, and that would likely lead to a retest of the lows or that next leg lower, but it will be more bullish if we can close back over the 50 EMA. The energy sector was down 3.71%, and the energy sector is still looking like full-blown capitulation with that waterfall wave of selling and only dead cat bounces in between, still closing below the lower Bollinger Band and coming back down to the support zone right around $70. While we are getting very oversold on the energy sector, this does not happen by chance, and this is everybody running for the door trying to get out of this sector, so be very cautious if you're trying to be a bull in the energy sector. So jumping back over to the S&P 500, this is definitely a strong bear market that you need to be very careful in, so use this very strong resistance level right around 380 to get more bullish, but while we are below that level, you need to be very cautious. If we get rejected from 380 and close below 370, I fully expect to see SPY reaching 350 very quickly. So use 370 as critical support and 380 as critical resistance, and then let the price action do all of the talking from there. As I always warn you, anything between a critical resistance and a critical support zone is very likely going to be a volatile whipsaw, so be very careful trying to trade SPY while it is stuck between 370 and 380. It is going to be very similar to this last trading range we had. It's much safer to wait for the breakdown and then follow the price action in that direction and trade accordingly. So be cautious out there and always use great risk management. Whether you're shorting this market or going long, you need to have a trade plan that uses proper risk management or you will never remain profitable in this game. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.